Okay, so you look at the price chart for a certain crypto asset and, well, it looks pretty bad. But what if that's all just a distraction? What if the real story is playing out totally behind the scenes? We're going to peel back the layers here and look at what's happening in the plumbing of global finance, the high-stakes world of venture capital, and yeah, even inside a presidential campaign.
All right, let's just get the obvious out of the way first. The asset we're talking about, XRP, is sitting around 29 bucks, and it's been in a 4-day slide. Now, for a lot of people out there, this screams bull trap, right? You know, that classic fake out where it looks like things are about to take off, but it just ends up trapping buyers on the way down. Honestly, it's the kind of price action that's enough to make anybody a little nervous.
So that really brings us to the core question of this whole thing. Is this downturn a sign that it's all over, that the momentum is just gone? Or, and this is what the source material suggests, is it something completely different? Is it the sound of quiet, methodical work being done right before the engines really fire up?
Okay, to get what's happening here, we have to dig into something the source calls the red screen paradox. And yeah, it's kind of weird. It's the situation where good news for the economy is actually bad news for the markets. So how does that even work? Let's break it down.
So you've got two completely different ways of seeing the exact same event. On one side, you have your everyday trader who sees 4 days of red and starts to panic. But then on the other side, you've got the big institutional players. And what are they doing? They're just calmly rebalancing. They're not reacting to the price. They're reacting to a huge macroeconomic signal. And here's the signal they were watching, the U.S. jobs report. It actually came in stronger than everyone expected, which you'd think is great news, right? More jobs. But for the markets, not so much. See, a strong job market means the Fed is probably not going to be cutting interest rates anytime soon. And that means the easy money that really fuels big market rallies, well, that's being put on hold. And that's why we saw such a negative reaction.
But here's the thing. While everyone is freaking out about the Fed and interest rates, the company behind XRP, Ripple, they're playing a totally different game. They couldn't care less about the daily price chart. Why? Because they're busy building the actual plumbing for the future of finance.
I mean, this quote right here, it just says it all. Ripple's head of MENA lays it out perfectly. They are ignoring the hype. They're focused on building real, lasting infrastructure. They're not getting distracted by all the short-term noise. And that right there is what the source is calling the long view.
And a huge part of that long-term play is getting critical approvals like this EMI license. Now, this isn't just some fancy piece of paper. Think of it as a massive regulatory green light, and it's in London, one of the biggest financial hubs on the planet. This allows Ripple to act less like a crypto startup and more like a fully approved, totally legal system for moving money.
And that UK license? It's just one brick in what you could call a fortress of licenses that Ripple is building all over the world. They're collecting these approvals to get the kind of regulatory clarity that big, serious institutions absolutely demand before they'll even think about getting involved. See, they're not just selling some futuristic dream here. They're building a fully licensed, fully regulated financial engine.
Okay, so let's zoom out for a second. We've talked about Ripple, but this is way bigger than just one company. What we're really seeing is a new kind of global race, a competition where billions of dollars are being strategically deployed to build the financial systems of tomorrow.
And this number changes everything. $15 billion. That is the size of a brand new fund just raised by the venture capital giant Andreessen Horowitz. You probably know them as A16Z. And you have to ask, what is all that money for? Because the why behind this capital is absolutely critical. Well, according to the source, this massive $15 billion fund is basically a strategic move in the growing competition between the US and China. You've got two very different approaches here. The US is backing private companies, betting on them to build the next wave of financial tech. Meanwhile, China is going the other way, building a top-down, state-controlled system. It's a really high-stakes race for who's going to control the future finance. And this is where it all comes full circle. In this new game, we're told that capital isn't just chasing hype anymore. No, it's being deployed like a strategic weapon to build out a solid, regulated financial system.
And that's why assets that already have that regulatory clarity in the US, like XRP, are being framed as essential building blocks for this new national infrastructure, almost like a financial Cold War.
All right, now for the last piece of this puzzle. And this one might be the most surprising of all. There's a potential political event brewing that could act like a massive fuel injection of new cash into the market. And it's something that, according to the source, almost no one is paying attention to. So here's how the chain reaction could play out. There's a proposal from President Trump to cap credit card interest rates at 10%. Now think about that. If that happens, suddenly American families have more money in their pockets every single month, money that isn't just getting eaten by interest payments. And historically, what happens to that extra cash? The argument is that a lot of it flows into riskier assets, stocks, crypto, the things people see as a way to get higher returns. And that's really the kicker here. The source calls this a potential boost for the middle term that absolutely nobody has priced in yet. It's this hidden variable, this potential stimulus that just isn't on the market's radar at all. So let's put all these pieces together. What does it all mean? Well, it means you've basically got two totally different timelines playing out simultaneously. You've got the short-term, day-to-day story that has everyone glued to their screens, and then you have this much deeper, long-term story that most people are completely missing.
You see, on one timeline, you have the here and now, that 4-day red candle back in January 2026. It's all just short-term noise from macroeconomic news. But on the other timeline, the one that spans the next decade, you have something systemic, a fundamental change being built, piece by piece, with licenses, with billions in strategic capital, and with policy shifts that could literally change the game.
So it leaves you with a question, right? The next time you see that screen flashing red, you have to ask yourself, what am I really seeing here? Is it just a number going down, or is it the quiet rumbling of something massive shifting just beneath the surface? Because the thesis here is that the biggest story in finance might just be the one happening where no one is even looking.